Okay, folks, a new day. Hey, Mark. Okay, let's get stuck into the session. Hey, Najim. So, as we look at the session, the first thing you always want to have a look at is what's going on in the news feed and the audio squawk. So, the first thing to look at is the 6:30 daily European opening news. Remember, what we want to get from here is what's the broad macro fundamentals, what's the sentiment, and are there any technical setups that make sense in our given environment? The major news story over the weekend was this latest US Supreme Court ruling against tariffs on Friday. But then President Trump immediately struck back to impose a 10% global flat rate tariff, which he then increased to 15% over the weekend. So, what that means straight away, markets are going to be trying to price the fact that tariffs aren't gone, they've just changed form, right? So the Supreme Court struck down the emergency tariffs, but then the administration immediately has called a 15% global tariff under the Trade Act. So that keeps uncertainty alive. So that's where we are. What we need to look at is how markets are positioning in light of that uncertainty. So first of all, let's go and have a look at US equity markets. Now, the initial reaction was higher on Friday. That initial relief rally faded because investors now realize that it doesn't necessarily reduce trade fiction, it just reshuffles it. So valuations, remember, in equity markets are already stretched, and there's that uncertainty about whether these high valuations are justified. There's also policy instability. It's a headwind. Okay. That's why we're not seeing equity markets sort of rallying strongly. Yes, they've rallied high. Oh, tariffs are gone. Oh, hang on, they've just changed form. So are we in a place of sort of certainty? No. So the other thing to note about equity markets is the bellwether for the AI story is Nvidia, and Nvidia's earnings coming up on Wednesday after the close. That's going to be a big driver of US equity markets. If you look at the S&P 500, the NASDAQ, look at the weighting of Nvidia. It really is the AI story, Nvidia stock, right? And where Nvidia goes, right, you'll find the rest of the US stock market follows. Look at the impact, the weighting of Nvidia. The size of this square means that it has a higher weighting in the index. So in other words, if there's a surprise earnings from, let's take, PAYX, right? It's not going to move the market so much as if there's a surprise earnings result from Nvidia, which has such a strong weighting. And look, the strong weighting in the NASDAQ, the Dow, enormous weighting, right? And the S&P 500. So those earnings are coming in after the close on Wednesday. So that's going to be a big driver to end the week. But at the moment, that's what's going on with the Treasury, with equity markets. Now, if you look at the dollar is mildly weaker. So that tells you this isn't classic risk off. This is more about US specific uncertainty and relative underperformance, right? But whether that lasts or not remains to be seen. Okay. Look at the Treasury market. There's been hardly reaction at all. If we see US Treasuries break out above 4.25%, so this surges higher and bonds are sold off on fiscal concern, that does become dangerous for risk assets. So you just got to watch the bond market as we go through the session. At the moment, there's not much reaction in the bond market. In commodity market, we can see gold has broken out above that level we were looking at, that 50 level on Friday, right? So this is your hedge against policy and geopolitical risk, and it's rising. So what's going to change the narrative today is the key question. So first of all, any escalation in tariff rhetoric during the State of the Union address, that's what from Trump, watch for that. Second, we got Waller speaking today, 1 o'clock, I think, 1 o'clock UK time. If he sounds less dovish than he has been, then the dollar can bounce on that. Oil, we've got a 10 spike in oil on Iran headlines, right? That flips this back to inflation risk and dollar strength. If we start to see oil push up higher, then dollar strength can come back in on inflation risk, because a higher dollar means higher inflation pressure, because oil is very key for inflationary pressure, because basically whether it's producing it, whether it's moving it, it involves oil. Higher oil prices increase cost pressures. So right now, it's not a panic market that we're seeing, but it's a policy and credibility uncertainty market. The thing to watch is if yields rise on deficit fears and you see equities fall at the same time, that's when it turns more serious. But for now, it is contained. Just looking through the rest of the calendar, you got, just seeing what else. There's that targeted strike on Iran, but that has not gone ahead over the weekend. So there's part of the reason why you may see a little bit of dollar weakness, just that was sort of rumored that it could happen this weekend. It hasn't. It may just be that there's too much going on with this US Supreme Court ruling, and the administration decided to hold off on an attack because they will want to see how the market's reacting to this latest development. Just seeing, let's have a look at the FX market. Yeah, we've covered that. Euro dollar, we'll have a look at the euro dollar and the opportunity that I see in that today. Yeah, so there's not a lot out there going on at the moment. We'll go and have a look at the trade opportunities that I can see, mainly based on sort of the technical levels that are out there. The calendar is pretty light today as well. We've got 3-month and 6-month bond auction. Shouldn't move markets much. Got some factory orders, again, shouldn't move markets much. It's Waller speech is the main driver, which should come at 1 o'clock for today. Yeah, that's the main thing. Now, in terms of technical opportunities that I can see around there, this is like, that was the line in the sand in the euro dollar. Now, I wanted to only go short euro dollar, but if you remember, I pointed out that that line is the line in the sand. So I don't know if anyone took a long on that. That would have been fine to have taken a long on the positive headlines, right? Because if tariffs are being removed, that's positive for risk. And you see that up, up and away. Now where I see, with the dollar uncertainty, I see exactly the same opportunity here, right? Either a long or a short at this 1.1807 region here. So what I'm looking for here, if you're long from here, it'd be a break even, you would have taken something off on the way, right? Now what I'd look at exactly the same with this level here. You stay underneath this level, stay long. Otherwise, get back up above that level, it's short, but this is the line in the sand here. So you just have a 5-point stop and using that line in the sand. Now that is valid, okay, there. Stay underneath it, stay short, get back above it, go long. That's my outlook for the euro dollar. Again, once you hit 20-25 points, take 50% off and leave the rest at break even. Silver didn't quite get that pullback to that region, very close to a pullback here, didn't quite get it. Gold got the breakout on that 50-50 region. And you can see it's broken out and trying to move higher. So that remains a valid area for longs here, just at that 50-49 region. Very, very tight stop. Try up to 3 times. If you get above it, stay with it. Okay. So gold nicely going out through that level. Dollar yen, remember we highlighted this area for potential short, but we said it's not valid given the market dynamics that's happening. So just going to stay aside on the dollar yen at the moment with all this dollar uncertainty. Euro pound, the buy bias remains in place and still keeping my original long at break even from that 8.719. Still expecting this to keep moving higher, and you can see the yield spread keeps ticking up. So holding this to see if we can get a run up to the 8,800. Just looking at it, you've got this sort of You got a false break of an inside bar here. You got sellers, then you got a bit of a hammer reversal bar. So technically it's quite mixed. But should you get above these highs, that should be a breakout opportunity here. That's something to look for. If we're able to push above those highs, then that should clear out this region in the euro pound. Aside from that, just the thing to look out for today is the move in yields. Oh, thanks, Najam. Right, let's have a look. Yeah, because we've hit that monthly high, haven't we? That 8,750. Yeah. No, I know, but I get your point. Let's just have a little look at that. Yeah, see, what's nice as well, I'm glad you pointed that out. If you look at this level on the month, we're coming up to the end of the month. If this pushes above those highs, you've got a bullish engulfing bar. And either way, you've got a bullish piercing lines. What this tells you is that it's by the dip in the euro pound that remains the bias. And if we get a bullish close above that high there, above the 8,750, is to stay with it. Right? So this is building, and euro pound is really trying to build higher, and it's looked like it's going to want to test that 8,800. Obviously, if that sort of starts rejecting that level, but you see you've got that big trend line that's being respected, you've got this channel that's being broken, and you've got that bullish engulfing bar. So if that forms as a bullish engulfing bar on the monthly, then this becomes the breakout is the trade, and any deeper pullback is the trade there. That becomes a very nice buy area. So we'll keep an eye on euro pound. As I said, I'm still long from this little region here, looking for it to break. Just based on the macros, I'm expecting euro pound to keep edging higher. The outlook for the UK should start flagging Bank of England interest rates coming along more quickly. So I'm looking for that to be pushed higher. Apart from that, just the thing to keep your eye on is the bond market, right? So this is not a panic market. And the US 10-year is holding underneath that 4.15%, just shows this calmness. But there is a risk here that the tariffs relate in more uncertainty, and if you see bond yields rising and equity markets falling, then we'll get some dollar strength come back. It's just one of those you can't see the future. Aside from that, also look at Governor Waller's comments at one o'clock, and if he sounds less dovish, the dollar can bounce on that. Okay, folks, just thinking, I think that is all for now. Yeah, but the key thing to be aware of, it's tariffs haven't gone, they've just changed form. That's the narrative to get your head around. So that initial relief rally was faded. US President Trump has acted quickly and put the Trumps straight back on another way. And if you go along to, let's find this, I'll give you a good ING have got a good article on the that's it. If you look at the options that US President Trump has, there's a nice article by ING on that. So US President Trump can basically the rough summary, check the details, is that Trump can use this current method he's using for 150 days before it expires. In principle, he could renew it for another 150 days. If that method he's using is challenged, there's another tariff act he can use. It's like the 1930 tariff act. So, in other words, Trump's got 2 or 3 more options to try if his current approach is rejected. So, in other words, tariffs look like they're going to be here for the medium term at least. Okay, folks, I hope that helps. The sort of level that I'm looking at today is that euro dollar level. That's the key one. Get above, stay with it, stay below, and that's the kind of line in the sand for me. Okay, nice little swing point. You can see here that is a nice area on the daily. You've got that inside bar forming here on the daily chart. So a rejection of that level is like a false break of a Harami inside bar. So an obvious turning point is here. Get above, go with it. Get underneath, stay short. Okay, folks, is that everyone clear? That makes sense. Yeah. Nice, Najam. Futures guys, I look forward to seeing you later. Otherwise, yeah, that's great, Mark. TM, excellent. Yeah, nice one. Okay, folks, just watch out for that bond market. If you see it getting hectic later, just keep your eye on the bond market, and that tell you whether the market's going into panic mode or whether it's just struggling to reprice things. Okay, see you later. Bye for now.